Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothwell, and boy, that half day after Thanksgiving, we saw some big volatility. You know what? The entire last week, huge volatility. Big moves up, big moves down. Loving this trading opportunity, whether you're trading options, futures, forex, cryptocurrencies, whatever it is. Tons of opportunity out there, maybe a little bit of gray hair and hair pulling going on along the way, but at least there's some action out there and things are moving. Now, will that continue for the next week? Well, let's look at some of the major announcements happening. We'll start things off with earnings calendars. Now, it's a very light week with regards to earnings. As you can see here, we start off on Monday with Coupa Software and MongoDB. Now, there's only 175 companies reporting this week, but there are a few big ones. Look at Tuesday, you've got AutoZone, Dave & Buster's, Toll Brothers, and the big copper company out there, BHP, will be reporting earnings on Tuesday. Wednesday brings you Gamestop, so you meme stock traders. Let's see if you have some fun on that day with their earnings. And Campbell's Soup. Soup is good food. Let's see if their earnings are good as well. On Thursday, that brings you Lululemon, Broadcom, Costco, Sienna, Oracle, and Hormel Foods. A lot of companies which may have benefited from an upcoming lockdown or just shopping in general. We'll see how Costco's numbers come out. And that is really it for earnings for next week. Now, let's look at our other major piece of announcements. We've been talking about rate increases, potential rate hikes. We saw New Zealand raise rates recently to combat inflation. We're hearing a lot of more talk track about inflation. And thank you, Mr. Powell, for dropping the word transient from your talk track, because most Americans knew that inflation was not transient. It was actually like a runaway freight train. We'll talk about more of that in a second. All right, so let's look at rate statements. Right now, we don't have the U.S. making a rate statement this upcoming week, but we do have a couple central banks. We'll start things off with the Reserve Bank of Australia, all mates in the Southern Hemisphere. Now, they are expected to keep rates right at 0.1%. Their announcement's coming out Monday at 10:30 p.m. Eastern Standard Time. Second one on the list is going to be the Canadian markets. That's right, the Bank of Canada will be coming out with a rate announcement. That's expected to stay at 25 basis points, and that will be on Wednesday at 10 a.m. Now, why is this important? Well, as currencies move up or down, it will help or hinder economic growth. Now, for the U.S. right now, we're seeing pretty good economic growth, and our rates have been stuck at zero. Now, the inflation discussion is talking about raising those rates, and we'll look at CPI in just a second. But if we look at the Australian dollar, this is an interesting one. Here you can see on the hard red edge, that Australian dollar has been tanking for some time, almost straight down for the past couple of months. Now, why is this important? Because Australia is a major exporter. And the more they export, obviously, the better that's going to be for their economy. And as their currency drops more and more against things like the US dollar, that means that Americans can buy more Australian products, which could do what? It can overheat their economy. And we're already hearing about inflation problems going on around the world. So if Australia looks at their market and says, hey, we have a potential for more inflation here if we don't kind of curb our currency, well, then we could see future problems even worse. So what are they going to do? There is the possibility that they start to raise rates to increase the price of the Australian dollar and thus take some of the pressure off the inflationary aspects of their markets. Now, they're probably not going to do it at this announcement coming up this week, but they might, and the talk track from their bankers will give you bigger clues, but there will be some nice volatility in that Australian dollar as well as the Canadian dollar. Moving on to our final piece, which is let's bring inflation home, people. Yes, economic data. We're talking about inflation for the U.S. markets. Last reading we had last month for CPI showed one of the highest we've seen in a very long time. And of course, all of a sudden, we're seeing our elected officials say, inflation, inflation, we're getting worried. Well, you know who should be worried? Us, consumers. I can't buy the same amount of goods and services that I could a year ago. It is spiking significantly. We're seeing 6.2% inflation right now in the United States, and the CPI number could give us some clues as to where we are headed. Now, the expectation is they might tweak this data a little bit to make it nice and rosy. But as you can see here on this chart, it's pegged pretty high, the highest you see on this chart. If we get above that 1.0 mark on this CPI number, then I think you're going to see these markets really freak out going forward. That means the Fed will have to be much more aggressive with regards to raising rates and tapering their spending to bring money out of the economy and to raise those rates, making the dollar spike, which could hurt the market. So the domino effect is starting to roll here with regards to financial assets and financial markets. We've got some great rate announcements, we've got some decent earnings, and we have fantastic economic data coming out on Friday at 8:30 a.m. Eastern Standard Time. That, my friends, is your Monday Morning Must Knows. We'll see you next week.